Hello friends, this is Raj Satri from Raj Option Trading. Today I want to talk about selling put options. It's an income strategy. A lot of folks I know sell put options and generate a monthly income month after month. So seller of the put option will make money if the underlying stock increases in price or stays the same or decreases slightly as long as it stays above the strike price. And seller also has an obligation to buy the stock at the strike price. So that's the obligation. That's why you're getting the money. You're taking risk. That's why you're getting the premium here. So you have a bullish outlook when you sell put option, and your risk is unlimited. It's actually limited to the strike price of the stock times 100 for one quantity. And your maximum reward is limited to the premium received. You will not make more, but if the price goes higher by the expiration date, then you can keep your premium that you received. And it can be combined with other strategies to reduce the risk. Example, maybe a put spread as an example. And typically you want to sell put option when the IV percentile is high, so that's when you make more money. And you identify a clear area of support, so that way you know stock will not go below that support area. So you basically select the strike price such a way your strike is around the area of support, so that way you expect to keep the premium that you received. And normally we tend to go 45 to 50 days to expiration. If you go beyond 50 days, it's a little risky because anything can happen. That's why you want to limit your time risk. And typically, passage of time, or a theta decay as we call it, is your friend when the stock is above the strike price. But when the stock is below your strike price, passage of time is also your enemy. So with that, let's look at a quick example here. Here we have a stock. Right now it's trading at $40. And you as a trader, your outlook is bullish. You think this stock is going to go higher. And you also identified the IV percentile of this stock is above 50 right now. So you think, hey, you know what, stock is going to go higher. And by selling a $30 put here, you're basically going $10 below the current stock price. You generate, in this case, sell one put option, collect $200 here. So that's the money you can keep if the stock expires or stock goes higher, beyond 30 by the expiration date. So that's why people are excited to sell put options. You generally go below the stock price, identify area of support, in this case $30. Even though stock is at $40, you basically sell put option at $30. Stock can go higher, 40 to maybe 50, 60, 100, or stock can come down to maybe 31 or even 30. So in those scenarios, you will still make money. You get to keep your premium here, $200. But if the stock comes below 30, then you start losing money. That's why you got to be a little careful. The selection of the strike price is very important. That's why you got to identify a clear area of support here and sell the put option at that strike price. It's very important. And one of the reasons people are attracted to selling put option, many folks have got a lot of shares, and typically broker gives you free credit for you to buy put option. So as long as you got a good stock portfolio, you can use that portfolio as a hedge and sell some put options. Think of it like you're playing on a house's money here and go from there. And the downside is if the stock falls below your strike price, in this case below 30, then it will use more and more margin. So that's why you got to be careful. You should not sell a lot of put options because it will eat into your margin and you will end up getting a margin call. That's why it's very important to not sell a lot of quantities. Instead, limit your quantity size and sell slowly and go from there. So with that, let's take few example of few stocks here. Today is October 3rd. Here is a list of stocks with the high short ratio, sorry, high IV percentile. So what I did is I made sure IV percentile is high and RSI is low. So that's the winning combination here. When the IV percentile is high, you get high premium. So you get to collect more money. But when the RSI is low, that tells you stock is oversold at these levels and stock can go higher. That's why we typically tend to select high IV percentile and low RSI when we want to sell put options. And as you can see here, you got to be very careful. Right now it's earnings season. Around the earnings season, the volatility will crop up. So that's why, all these stocks earnings is coming up in a month or month and a half. That's why you see IV percentile is shooting up here. I selected above 45. That's good enough. You could select those stocks here. And many of you, you are fundamentally a good, fundamental type folks. So that's why look at fundamentally good companies with nice sales growth and gross margin. Those are the ones you should select. And also don't look at, a little bit cheaper stocks like ATUS. I would say go above, say, $40, $50. Don't look at the stocks which are at $20 or so when you're selling put options. You will not get much premium here. So with that, let's take a look at one or two examples and see how to really sell put options and make sure fundamentals are clear here. What I will first do is look at first stock here, Vertex Pharmaceuticals. As you can see, it's a great biotech stock. I love this company. Nice sales growth and gross margin, handily beats rule of 40 here. And also, as you can see here, it did 1 year sales growth positive. That's good. Insiders are buying slowly and high IV percentile. And stock has not done much in 1 year. It's a negative 34% in 1 year. Has done great in 5 years. So with that, let's hop on to Thinkorswim from TD Ameritrade and see how we can sell a put option and how we can make money with it. So let me hop on here to Thinkorswim platform here. I will say Vertex. So first thing we have to do, before we sell put option here, I will close this a little bit. So as you can see here, first you got to look at the chart and identify a clear area of support. As I look through this stock here, at least right now, I don't see a clear area of support. What I will do is I will increase the timeline here. Instead of say 1 year, I would go maybe say 2 years. As you look through 2 years here, as you scan through here, I see there is a support area here. Right now, stock is below that support area, and there is let's increase even further because stock doesn't seem to have a good support area. I will say 3-year weekly. So looks like there's a good support area somewhere here. Stock has been like somewhere in this area, say 167, 168. That could be a good support area. Right now, stock is at, let's see here, stock is at 180. So what this is saying is really your support area can be around 150, 160 area. And you could sell put option, I would say somewhere around 165 or so. This is how you identify a clear area of support. So that way you don't want to burn, when the stock falls off. So now we identified clear area of support around 160, 165 area. And then we'll go into trade tab here. And as you scan through here, $180 stock, it went as high as 280 in 1 year. It went as low as 178. And as you scan through here, put call ratio here is 0.38. That tells you folks are bullish about this stock. As you can see here, 5,000 contracts sold on the call side, just 1,960 contracts sold on the put side. That clearly tells you people are bullish about this stock here. And as you scan through here, we also have VWAP here. VWAP tells you right now, stock can is can go a little say lower here, 180.19. That seems to the strong area for the stock here. So that tells you it may not come too low, in a day or something along those lines. So now what we do is really, as a seller of put option, you got to understand you don't want to go too far out and sell. Even though money is more, I would say stick to around say 45 to 50 day to expiration. So with that, I would say you could go look into 19 November, which is say 47 days out. So if you select that here, as you scan through, look through here, strike price, and one thing to notice as you want to sell put option is hover around all the way here. Look at here, it's telling you in 47 days there is also earnings involved in this time frame. Stock can go up or down $26. We also call it market maker move. So what that tells you, stock is at $180. It can go higher by $26 or it can go lower by $26. So that puts you around 155 time range here. So if you go to 155 here, if you sell this put option, you make around $1.05. I think it's worth the risk here. You're basically making sure you are accommodating this market maker move, which is $26. You are going below the stock price by around $25 or so. You could sell this put option here, as you see here. If you sell this put option, let me close this right here. Yeah, if you sell this put option here, you're going to collect. Oh wow, this is let me close this here. We want to sell at 155 right here. So if you sell this put option, you're going to make $1.05 here, and you can confirm and send. You're going to make $105 by selling this put option. And if the stock price stays above 153, you will break even. But if the stock price stays above $155, that's where you sold the put option strike price. You get to keep your entire $153 that you earned. But on the other hand, if stock shoots up to $200, you can still keep your $105. You cannot earn more. That's why selling put options is a capped strategy. Profit is capped. Your max loss in this case is 15,395. That's basically, you got your stock price, strike price at 155. That's where you sold, minus the money you collected here, which is 105. That makes your max loss to be 15,395, assuming stock will go to zero. So that's rarely happens, but you might get stock assigned to you. Only downside here is if the stock comes down, below your strike price, which is below 155. That's when you'll have more and more margin amount. So as you see here, your buying power effect right now is 1,560. As stock comes down and down, your buying power effect will basically increase more and more and more. That's why folks who are on heavy margin will end up getting some margin call as stock comes down. That's why you got to be careful here. Don't buy too many stock. Don't sell too many put options that will handicap you by putting you into margin call territory. So with that, this is one strategy here. But if you don't want to do this, choose a spread strategy that will be a little better for you. For example, here we identified 155 as clear area of support. Look here, one more thing I like to always look at is probability of touching here. It's a it's a feature from Thinkorswim here, probability of touch. So right now probability of touch is 24.39. That tells you there's a 24% chance of this stock vertex coming to a strike price 155 by 19th November. I think that's a good enough percentage here. Typically, folks are comfortable at 30% or so. there's a 30% chance of reaching 155, but 24% is much better. So I would always ask you to look at probability of touch. Make sure you are basically below 30%. That's always a good idea. So with that, this is how you kind of sell a put option. It's an income strategy. And sometimes, folks want to sell put options on their favorite stocks. I've seen people selling put option day in and day out on stocks like Apple as an example. If you see Apple right now, it's as it comes up here. So as you look at the Apple here right now, IV percentile is very low. So that's why it's not a good idea to sell, the put option on the Apple right now. But there are people who sell, on Apple also. So before I go to Apple, let's go back to Vertex. I want to show you, if you're not comfortable selling a naked put, you can also sell a spread here. You could do 155, 145 spread. The money you receive could be less here, but the risk is also low. So if you do something like this, 155, you're selling at 155, and close this, you're selling at 155 and you're buying back at 145. So if you do something like this, you collect 72 cents, and if you confirm and send, as you can see, your buying power effect is 928 here. I think this is a little better strategy. The money you get in is a little bit less here, $72, but as the stock goes lower, your risk is capped. So your risk is not too much here. As you can see, your max loss is 928, whereas in the previous scenario your max loss was around 15,000 or so. This can be a better strategy. It will generate you slow monthly income, not a huge income, but at the same time risk is capped. Always be careful to trade around earnings, because as you can see here, earnings season is full swing ahead. And we'll look at one more stock here. I will look at probably Checkpoint Software. I know this company for a long time. This company is a little wild trader around the earnings. Earnings is coming up this month, a little bit later this month. That's why, as we see here, IV percentile for this sleeper stock has gone up to 54 here. So with that, let's go back to Thinkorswim platform and look at our stock here, CHKP. Checkpoint. It's into cyber security. So as you scan through here, we got our 3-year chart. Look through here on the lower side. I think this could be a good one here. It went down, came up quickly. This could be a good support level around 96. I would say even we could even go to 100. This is again a good support level. We could look at around $100. Currently stock price is $113. If you look at last couple of quarters, quarterly earnings, stock came down a little bit, went up, came down a little bit, went up. I think we could probably sell something around $100, and let's see if we can do that here. So support level, as you can see here, around $106 seems to be a good support level. These are, I think, let's see here, these are COVID-19 time frame. That's when stock came down drastically, but after COVID, looks like around 100, 105 is a good support level. So with that, let's go back here, and we want to select 47 days to expiration. We don't want to go too far out. So with that, $113 stock, we will select around, say, $105. I think this is a good range here. And as you scan through, hover over here. So what this is telling is market maker move is $11. So right now stock is at 113. It can go up by $11 or down by $11 by November 19th. So if you sell around 105, so that's maybe not $11 up, but a little higher, little bit risky, but I think it's probably worth it. As we look through here, probability of touch is 48%. So it's telling you there's a 48% chance the stock will breach $100 by the expiration date. I would say It's not good enough for me. I would pass on to this year. I would go to my next stock because if I sell at 100, there is a chance of stock breaching $100 is 74% or 58% in this scenario. That's not good enough for me. I would pass on such candidate and look for a better candidate. So with that, if you look through here, there are some few of my favorite stocks here. One of them is PDD Pinduod, wild trader, as many of you know. Let's quickly select Pinduod. So if you look through the chart here, Pinduod, it went up as high as 212. Okay, it's coming down right now. If you look at clear area of support, probably around I would say this could be a good area of support here around $72. Right now it's 88. And if I go to here, option chain here, 47 days out is good enough to sell put option. And as you hover here, $17 up or down. Right now stock is at 88. That puts us around say $70 or so. I would say go to 65. Your probability of touch is 30%. That's good enough. You could sell a put option right here, collect $1.28. If the stock stays above $65 by November, then you get to keep your money. So you could confirm and send this and collect $128 and keep waiting till the expiration date. Or if you make some money in between, you can sell this put option for a profit. So with that, your max loss, as you can see here, is 6,372. That's basically 65 strike price, 6,500 minus money that you collected already. So this is one way to trade, but you could also do a spread here, which could be safe for most folks. If you want to do spread, you could do $10 wide spread, 65.55 spread. You could sell that. So as you see here, 65.55. There you go. You collect 80 cents, and as you can see, your risk is max loss is very low right now, 920. This is a little bit better strategy. You have a bigger portfolio. Keep selling some put options to or put spreads, as you can see here, to keep collecting some incremental income. Don't overdo it. Don't do too much quantity size. That may put you in a little bit danger here, but just do a little bit at a time. That can offset your portfolio nicely and take it from there. So with that, here is the complete list. You can go through here. There are some good stocks. I would say don't look at the stock whose price is below say 25 30. Look at the other stocks with the high short ratio, high IV percentile. All these stocks have got high IV percentile and low RSI. Good candidate. Be careful around the earnings. Earnings is coming up quickly. Many times folks want to sell put option just after the earnings, so that way earnings is over, and typically just after the earnings there will be also some there will be some increase in the volatility, so you could take that as an opportunity also. But if you want to sell some selectively on your favorite names, and if you don't mind buying the stock at the lowest strike price, you could sell before the earnings also and take advantage of elevated IV percentile and go from there. So with that, here is a little bit cheat sheet for you on selling put option. Selling put option is a bullish strategy. Make sure RSI is below 35 or below 40 sometimes, and make sure IV percentile is above 50, and always go 45 to 60 day expiration, and make sure delta is less than or equal to 15, or probability of touch, as we looked at, is 30 or lower. So with that, thank you very much. Happy investing and trading. Please subscribe.